G'day guys, how's it going? My name's Reese and I'm from Reese's Pieces, and today I'm going to be running you through my thoughts on Bitcoin for this week. So like I always like to do, what I'll do is I will look at what I was seeing last week in my video, see how that played out, what came of that, and then we'll head to this week and we'll run through what I'm seeing and what could potentially play out. We're actually going to do things a little bit differently today, so we're going to do this week's charts in VEMA Trader, which is very exciting. So if you guys couldn't make the live demo that we had last Thursday night, I'll put the link to the replay of that in the description below, so it's really easy for you guys to find. And there is a trade on BNB. I haven't charted it up yet, but I might throw that in as a bonus for you guys because I did see something before that I quite like the look of. So what we'll do is we'll head to the charts and we'll get started. Righto, so this is the chart as I was looking at it last Monday when I recorded my video. Like I said, I didn't really expect to see that 46k level get hit because it would have required a really rapid buyback. Definitely could have happened, but the market typically moves in waves, so I would have sort of expected to see something more like that taking place and getting us there over the course of 2 or 3 weeks most likely. So what we did see was a move to the downside. Now, unfortunately, even though I was keen on longs from this sort of 40k region, I did not catch this long, and the reason for that is that I didn't look left enough. So I'm always big on looking left. Looking left is how you find what the market's done previously at those price levels, and I actually missed this wick, right? So that wick, to me, stopped in the middle of nowhere. My demand zones are lower, so it's kind of a weird place for a wick to stop, right? Especially after a big, harsh sell-off like that, and especially when that, bounce from that wick led to a big move up. It's a level of significance for sure for me. I didn't have it last week because I didn't look left enough, on the 4-hour time frame. I certainly did on a daily. But you'll see that if I get out of the replay tool, that wick held to a T again. So really indicates that was a key level. Unfortunately missed it. Not too upset because even with the long that I was keen on, if I had, staggered entries in from up here or anything, it's getting a really big stop loss. It would have probably butchered my risk to reward, which already wasn't great because of the size of that zone. So I'm not sure if I would have even taken it off that zone. But just always a good reminder to look left, see what you can find. So there is actually one other trade that we'll review because I put up a bonus video on a trade that I was looking at on VEMA on Wednesday. So what we'll do is we'll use VEMA's review function and we'll have a look at what played out on that trade. It was not a very good one, to be honest, but that's all right. We'll go and have a look at it. And yeah, that's what we'll do. And then we'll get into the charts for this week. Righto, so this is a trade that I was looking at last week. I was trying to take a long off this alpha trend line and my stop loss was just on the other side of the zone. Unfortunately, it did not play out, got wicked out. I actually caught a second long from a bit lower down, but again, got stopped out. I moved my stop on that one, so it really wasn't too bad of a loss, but nothing good for me on Bitcoin last week. Now, one thing that I will say is I had kind of a bad feeling about this trade, right? It's on the hourlies. I don't normally trade the hourlies. I'm much more a 4-hour, 15-minute trader, but it fit the rules of my trade plan. So I was like, all right, I'm going to take it. I've been considering for a little while adding a gut feel box to my journal. And the reason for that is this trade, I had a gut feeling. I was like, I don't like this, but if a trade fits your trade plan, you want to be taking that, right? It's the only way to really see how your trade plan works. As soon as you start ignoring your trade plan based on feelings, right? If it had ticked all my boxes, but I was like, oh, don't like the look of this. It's not a good way to trade, right? Your trade plan should just be, okay, box are ticked, I'm trading, box are ticked, I'm trading. It shouldn't require emotions or really thinking about things. I shouldn't say thinking because you are sort of thinking, does this fit my trade plan? But it shouldn't be like an emotional decision. But I have found that I tend to have gut feelings that, anecdotally at least, are pretty good when it comes to trading. So the only way to actually know that is to journal that data. And so if I do start recording, okay, gut feeling was this is a trade that I really like. Gut feeling was don't take this trade. And then after a while I see, okay, my gut feeling's actually 80-90% accurate. Then I can put it in my trade plan, right? If my gut feel is off, if my gut is saying something's wrong here and it still meets my trade plan except for that, don't take the trade. But until I have the data to back that up, you are just winging it. You're just flying by the seat of your pants and it's not how you should be trading. So I haven't done that yet, but it is something that I am strongly considering doing. Anyway, that's enough about that. So what we'll do is we will head to this week and we'll start seeing what could potentially play out. Hopefully we can find something cool and we'll get started. So this is what I'm currently seeing on the weekly. So nothing has really changed from last week. We had one close as a doji, nothing super exciting. Again, we've broken that big long-term uptrend. But the two key zones that I'm looking at, we're still a fair way from them, so nothing super exciting on the weeklies. When we come down to the dailies, things start to get a bit more interesting. So we have got two daily supply zones that I think are pretty key at the moment. Let me just change that to my daily. This one here is the supply zone that I think is really key. Now, the reason that I think that is that it's the supply zone that led to the break in this strong level, which is what I was talking about last week. There was a really, really strong level through there, and this zone is the one that led to the break in that. So that tends to indicate it's likely to be a strong zone. It's also been retested. You can see that wick there and even that wick there came back up and rejected really well. So if we do get back up there, that's about the 46k mark, I would expect to see some selling pressure, right? Who knows how much, or 46 to 48. You know, you don't know until you get there, but I would be surprised if there was no selling occurring there at all. The other zone that I'm watching is this demand zone. So that was one that got front run last week. And they're pretty much the key areas for me for now, right? If we break that daily demand, then the next one is way down around 30k. So that's sort of what I'm seeing in terms of trend lines. We've got a big bad one out there. And that's about it for me on the dailies at the moment. You can probably run fibs. In fact, you certainly could. Let me get off that so I can include the wicks. Right, so you can see this area again lines up really nice with the 23.6 of the entire move down. And if I come down to the 4 hours and get rid of those fibs and just run them on that recent swing, you can see it lines up really nice with the 50 and the 61.8. So again, a lot of reasons for me to be shorting around this area. You've also got this 4 hour demand zone, which again is the one that, you know, when you zoom in, is the one that led to the break of these key levels. So quite likely to be sellers in that region, and probably got a trend line. Actually, let's zoom right out, see what we can see. Probably got a trend line, so this one will probably be more of a line of best fit. Let's see what we can do. Something like that is probably how I draw that in. So you got that trend line there, cool. And in terms of demand zones, we have one that formed last week. Now, it's not one that I would consider super strong, right? The push up out of it is not huge, but we have retested it really nicely, so that's always a good sign. Change in market structure, I mean, maybe on the 1 hours, probably not on the 4 hours for me. So not what I'd consider a strong zone, but has been well respected, so it's something that I'll definitely keep an eye on. That's sort of it for me. So really what I'm thinking hasn't changed much from last week, right? If I can get a short from these two zones, then I am very keen on that. I really like the look of shorts from up there because my big high time frame bias is bearish, right? The market is quite bearish when you look at the dailies. That said, this is a pretty weak buyback, right? After big moves down, you expect to see moves up, and we've certainly seen some of a move up, but it's there's really no strength to it, right? There's not much volume coming in. It's not really looking good for Bitcoin. So you could draw a bit of a bear flag, ascending wedge. I mean, I feel like I'm forcing that, but you know, you can definitely put it there. It's not the worst I've ever seen. But yeah, really for me, what I'm seeing at the moment is more likely to go to the downside than to the upside in the midterm. In the short term, I'd lean upside purely for the fact that, you know, big sell-off needs recovery at some point. So, and to be honest, it's probably partly hopium because I want to get my short from these levels. So that's sort of what I'm seeing. Now, the beauty of VEMA is that I can set up these trades and not have to go anywhere. So the trade that I'll be looking at from here, I'd want a trend line to run across the bottom of that demand zone. And it's going to get messy. So let's clean up the chart first. So fibs we still want there because we're going to use them. They are relevant. Those two zones are relevant. We probably don't. No, we'll keep that there. So just that trend line, that's the only thing I'll get rid of. And I want a level above these wicks. This is going to give me my stop loss. Alpha is going to be my entry, and my take profit will be down here. So, in fact, I can do that with the tool. So we've got alpha. I'm clear of these wicks and the 61 fib, that's what I'm talking about there. So, pretty solid, nearly a 5-to-1 trade if we do get up here. So then all I have to do is go, we're looking for a bounce because we're predicting price to come up and bounce off. So the direction is short, distance to activate 0 because I wanted to touch alpha exactly when I come into my risk management. So 1%, I'm quite happy with that. Minimum risk to reward 2. Stop loss will be fixed at 47653. 47653. And my take profit is going to be 39230. So 47653. Oh, okay, so all that's happening here is that, let's just go straight up to 10. So because I'm using a test account, there's like $100 in it. And so you'll run into the position size 0 error because if I use 1% risk, it's literally such a small position size, BitMEX won't allow it. So I'm happy to risk 10% on this trade because it's not actually 10% of my account. It's just because I am testing VEMA at the moment, I don't have much money in the account. Touch wood, nothing's gone wrong. We have an insurance fund, haven't paid a single dollar. So that's a pretty good claim to fame. But it's always smart to only use $100 when you aren't sure how things are going to go. You'd much rather lose that than lose a lot more. So in terms of my tags right now, I have a daily bear bias. Beautiful 4-hour bear bias. So I also have the 50 fib. What else did I have? There is an EQ there, so 4-hour EQ. And there is this trend line. I feel like this first level, I feel like we'll hit that long before the trend line. We'd really have to crawl along to get them all to line up at the same time. So I won't include the trend line tag. Confidence. Oh, I'm tempted to go 7 for this one. To be honest, it probably is a 7 between, I'm going to set up another trade. Between the two trades, I think it's a 7. They sort of complement each other. So, and I'm very happy this morning. So that's what I'm looking at for that first trade. Now, if we move up to the second trade, it's essentially the same thing, just off that higher zone. So something a little like this. And you'll notice that I had my stop loss of the first trade into the zone of the second. That's something, I won't always do it. It sort of depends on the two zones. But in this case, because of those wicks, it's something that I do want to be clear of. And it allows me to potentially get pulled into two trades, right? It can come up here, nearly stop me out of my alpha trade, enter me into my Bravo, not go up above these wicks, so I stay in alpha, and then come down and I end up making, considerably more. Now, it also means I'm risking twice as much. So I always do, be pretty careful with my position sizing and my risk management when I am setting up these sort of, they're not really staggered trades, but these double trades. So always keep that in mind. You don't want to be going and putting, you don't necessarily want to be going and putting a whole 1% on. Because if price pumps, you're going to cop a 2% loss. So not always ideal. Now we'll do the same thing here. Minimum risk to reward 2. Fixed stop loss value is 48718. Value on my take profit is 39298. And in terms of the journaling, pretty similar tags, right? We've got daily supply. We have got daily downtrend. We've also got our daily bear bias and our 4-hour bear bias. Daily downtrend and 61.8 fib. Right. So I think that is it for those two trades. Again, I'm going to go at 7. I'm going to go very happy. And I could potentially, because I feel like if that's sort of a key horizontal, I feel like if that breaks, no, I'm not going to do it. Yeah, I could potentially set up a cross trade, but it's just not really, it's not really my style. I don't like the look of it, right? If I was too short, which is what that cross would be doing, I'll set it up. I'll set it up, but I won't actually save this one. So the other trade that, I'm not considering it, but that is potentially here, is you can see that's a pretty solid EQ, right? It's held quite nicely there. And actually I'd move it down a little bit just to allow for that close. but there's a pretty solid EQ level through there. If that breaks, I've already got my bearish bias on the higher time frame, and I do sort of think it's reasonably likely we'll see this 40k level. So if this breaks, I'd say there's a good chance we're heading here. So what I could do is add a third trade on Charlie, which would be a cross. I'd want to be short, and I'd want to enter only on a candle close below. So I couldn't get caught by wicks below Charlie. I'd only be entering once a candle closed underneath. For my stop loss, I'd use other side of trend line, and I'd go up 1.5%, should cover that. So that'll mean that wherever price closes, it's still going to put my stop loss 1.5% above Charlie, so somewhere around the 42k mark. And my take profit is going to be the same, so like 39, I think it was 39,300 roughly. Now this is when the minimum risk to reward is really important. So I'd put it as 1.5 here because I'm going to have confirmation on this trade. But the reason that's so important on crosses or candle closes especially is I don't want to enter if, where's my rectangle tool, if price closes there, right? Because I'm going to have a terrible risk to reward. Say the candle looks like that, it'll be red obviously. But that would be a terrible risk to reward if price closed way down there. So by setting this as 1.5, it means that VEMA will only enter me into this trade if we get a close that looks, so hang on, that was about there, the 1.5%, and we're looking at there, so that's about right. So as soon as that crosses 1.5, VEMA will not take that trade. So if we get a close anywhere below here, VEMA's just going to reject that trade, and I won't be entered into it. If we get a close below Charlie, but within this region, then I should get into a really nice, 2.5, maybe even 3 to 1 trade. So that's it for the week. I'm not actually going to take that trade on Charlie because it's really not my cup of tea, not my sort of strategy. But those two, the Alpha and the Bravo trades, definitely very much up my alley. Something like that is not necessarily what I see as the most likely, but it's what I want to trade, right? I would love to be shorting from this 40k, 46k, 48k region. We may never get there, but if we do, then I really want to be shorts, and so that is how I'd set up those trades. So that's it from me, guys. Hope you all had a ripper weekend. Hope you're all gearing up for a big week. And let me know what you think of VEMA. Hopefully you guys caught the Thursday night demo, and I'll talk to you very soon.